Hello, traders. I trust you are well and that everything's going well wherever you may be in the world. Welcome to Live Trading Profits. Let's have a look at what the market is got for us presently. Well, I've got, let's start with the indexes. The index is up here. So this is German 30, DAX 30. And as you can see, I always mark, just for my own visual cues, the first candle of the European session, which is that candle. Now you can see that this bull breakout was British retail sales. So before the market opened, huge acceleration up, but that failed. By the time the market opened, the bulls tried to get into the market again and accelerate up. And when I saw that, my thinking at that was, well, if the bulls are strong, as that candle was forming, then all they need to do is follow up and we get a bull breakout. Then we look for a pullback. And once we get a pullback, we can then see an entry for us to get the breakout pullback high one. Okay, first high, higher low after the bull breakout. But we didn't get that. We just went sideways. And I mean, this is now 2.5 hours since the open, and we are still, within the measured move of that first candle. So there is obviously quite a lot of forces in the market, bears preventing bulls going up and bulls preventing a big bear breakout. So when this took place, you're still within that trading range. So you want to wait for a breakout and then a pullback. When you get to the EMA and you didn't, just kind of gone sideways. So probably best to wait. If you had taken that trade as a pullback trade with your stop up here, if you'd gone to break even, you'd have been out or holding on to it. But when I'm looking for a pullback, I prefer to take the first pullback off the EMA to see if this acceleration carries on. But in any case, as it is, there is nothing to worry about. We are in a trading range. What am I looking for? I'm still in the market. All I want to see is bears give me a breakout. And the breakout is simply a candle breaking out beneath its previous low and follow through. And if I get a pullback, then I can still look to get in. So there is still time to watch that and see what takes place. Let's have a look at another index, UK 100. Again, same kind of thing. Here is the opening candle of the session, so it provides support for the market. The bulls always are defending that. If you have a look at it, pre-market news candle. When I say pre-market, for me, it's all part of kind of the Asian session still until the market actually opens. But we have a breakout, failed. We have a higher low, the first candle of the session, and that's provided some support here. Again, attempt to break out beneath it. It's failing so far. If the bears are strong, we are going to get successive breakout candles beneath key levels. Then you can look to trade it. So it's just something to watch out for. I mean, the first candle provides support. You can see we accelerated down here. Could you consider that a breakout? Well, a breakout is going to be breaking out of something. Okay, so bit of a failed breakout follow through, and we are right at support. Hence, we have that reversal. So it's probably just better to wait a little bit to get some clarity. Interesting enough, on NASDAQ, which is a US market. Well, I'm saying interesting enough because This is European market session, right? But you've got the US markets, they're open. There is that continuous market taking place. We still a good 4 hours before the actual US markets open. But have a look at this. Well, a bit of a classic example to illustrate that breakout pullback that I speak about often. So that was the first candle of the European markets. Then bears tried to take over, they failed. Okay, so you don't want to just jump in until again you have confirmation pullback. So you always want to see a candle breaking out below something. So here in this case, breaking out below the first candle, breaking beneath this high low. Fine, but let me see follow through. So if I did follow through here, so another bear breakout candle, then if I had the pullback, then I can look to short. But I didn't have that. So now it just gets you to wonder if the what's happening with the bulls, So we're still within this zone of the first candle. Then we have a breakout. Okay, so there is a breakout candle breaking out above the existing high of the day. We then have a follow-through candle. And now when you get this, you think, okay, breakout, I'm waiting for the pullback, and then I'm going to look to jump into the trade. So when I saw this, I was waiting to get the pullback. So I was waiting, and I saw that as my pullback entry. Explain that. So there is a breakout, confirmed breakout. There is a pullback. That doji is a pullback. Bears tried to make the breakout fail. We broke beneath the low of this candle. Then, I talk of the breakout pullback, high one. So there is the first higher low after a bull breakout, a pullback, high one, first high after bull breakout. So I put an entry above that. You take that trade, a couple of ways to manage your stop. The easiest is just put a measured move. Okay, measured move of that candle would be down here. You can use that as a stop level. Show you another. Turn it just now. Okay, so you can put a stop beneath here. Or if you want to be more conservative and say, okay, I'm just going to put what's the widest stop I can put in? Then you have to go to the beginning of the breakout, either here or there, but that's the candle that led to the breakout. So you can put a wide stop if you want it, that's fine. So either a measured move stop or a wide stop. So go triggered in, and moment, as soon as you get triggered in, just for trade management, I then like to pull the stop up to there. And, of course, you don't know what's going to happen, but you're open for acceleration in the market, keep going up. But then I saw that failed breakout, and that became problematic. And eventually, when that turns, I closed the trade, small profits, but I mean, the structure was pretty clear. Okay, I will have a look at the UK chart just now. Nasdaq chart 8 bars after entry. Let's have a look. So trader saying 2, 3, 4, 5, 6, 7, 8. I think the trader is saying there's an entry here. Well, I mean, if you take in this trade, this is not a breakout pullback. I want trade, because if you look at it, what did we break out of here? If you wanted to argue, well, there is the first candle that's breaking out above that. There is no follow through of that candle. Okay, so that's a double bottom, and we begin to accelerate above it. So we are in a trading range. That's another kind of entry, but not a breakout pullback. So if you're taking that as probably, a high low double bottom, but there is no bull breakout here. Okay, the bull breakout starts here, and there is a pullback to it. So if you're taking that, and rewarded. Fantastic. Okay, there's a question just before we was it a question or comment on UK 100? So I'll just look at it again. Yes, yeah, definitely. So it's the trader said this is a weak bear breakout. It's actually, if you're talking about here, it's a failed breakout. We have a breakout candle and that failed. So that's a failed breakout. We need more confirmation. Here, that's a weak breakout. We have a weak breakout straight to resistance, to support, then it failed. So, if this was breakout candle followed through another candle, then a pullback, yes, would have been let you know. That's a weak breakout. That's a failed breakout. So we just want to wait for clarity on that. Let's have a look at Dow Jones. So just have a look at indexes. Okay, again, same kind of thing. First candle, bears failed. Bears tried to break out, failed breakout to near. So there's no breakout here. We're going sideways, and then the bulls are starting to break out above. Here is a breakout candle. We're breaking out above that high. Inside candle is a pullback. Okay, but it's good enough for the bulls. Could you buy that if you want to say, okay, George, I think my breakouts are down here. We broke out above that high. See, there is the high of the day after the open of the market. So you could say, okay, from the open of the European market, there's a breakout. Confirmation of breakout, we also broke above that day. Could you take that? You could take that trade. Okay, the could that I'm emphasizing, only thing you need to bear in mind is this green line is the high of yesterday. Okay, that's a high of yesterday. So that could be a level of resistance. You take the trade and immediately it fails. But that trade you could take, bearing in mind what I've just mentioned. If you use the measured stop, you could put your stop beneath here. Now, if I was deciding to take that trade, I didn't actually. I think it was almost the same time zone as the Nasdaq. So I decided not to double up on the risk in the market. If I was going to take that trade, you can use a measured move stop, or because you're going immediately into the level of resistance, which is high of yesterday, in another put of stop beginning of the breakout. So if it goes up and comes back and you exit, you can continue risk. But had you taken that, you have to exit between here. This is a big failed breakout. Now we are in a trading range. Now, I just want to show you something quickly there before we go. There is an index which I've never traded before. I put it in today and I didn't take any trades because I just want to get into the rhythm of it and see how it functions. It opens at the very same time as European markets. In the European markets, it's a Swiss 20, top 20 companies publicly traded in Switzerland, Swiss 20. So a pretty strong index. And the reason I decided to add it on, I was doing a bit of research on top indices in Europe. And of course, you got FTSE, it's got UK 100, that's got a part of Europe, DAX, you got the French CAC, and then you've got the Swiss 20. Now, you probably find when you look at the DAX, okay, look at the trading range, we are within the kind of range of the open. If you look at UK 100, still within that. But I'm finding this quite fascinating that, we've kind of gone below the low of the open of the market, and we kind of sold off. I mean, the price action is still the price action, but I'm quite excited about getting this on as another market to trade. Now, why am I saying it's nice to observe and be careful? One of the things to bear in mind, if you, let's quickly look at NASDAQ 100. So I took a trade here, and what time was that? This was 11:05 MT5. And that Dow Jones set up almost the same time. Now, when you see that, you just have to be careful. I happen to be watching and observing this, and I thought I was happy with that structure. If this had dodges or something within there, I probably would have been looking at the Dow, because I'm looking at who's breaking out at the present moment and saying, oh, there's a good breakout, maybe taking that. In the past, I would take both trades at full risk. If you get stopped out, you are, if you're risking 1%, you're down 2%, or if you're risking 2%, down 4% immediately. And that can become quite problematic. So you need to take one. Now, the other reason I then put the Swiss 20 on, if you're looking at the way it's trading and trading, you might find that you're looking at DAX, you're looking at UK 100, and it's not as neat. And then you find, hang on a second, that Swiss index has got a much better entry. You can take it. Same price action, same structures. So hopefully, when we have a chat next week, I would have had a chance to trade it a little bit more during the week, and we'll share a lot more about it. Okay, I see a raised hand, and I am not sure. Oh, sorry, 8th bar on the right after your entry bar. Hold on a second. Did I go back the wrong way? 1, 2, 3, 4, 5, 6, 7, 8. Okay, sorry. I went 8 bars to the left, and the trader was talking about 8 bars to the right. Okay. Now, this is a breakout pullback. It's not a breakout pullback high 1, because that's the first one. So you're probably talking of breakout pullback high 1. The second pullback is here. It's a bigger pullback. So that would be another pullback to trade. If you see that, and what I would recommend you do after 3 bear breakouts, and yes, it's another pullback after the breakout, wait for a close above the EMA. So that would have been a legitimate close above the EMA, and then you keep your stop down here. Okay, and you can still be in the trade, or if you see a setup inside, that's a breakout mode pattern, and you think, hey, the bears are creating a breakout mode pattern, might just accelerate down, you can exit at break even if you want, or just wait a little bit more. So yeah, my apologies. I'd gone 8 bars to the left, but it's 8 bars to the right. All right, guys. Are you trading trend pullback on 5-minute chart? I'm not sure what trend pullback means, but I use the 10 EMA. This is the 10 EMA that I use. And I'm looking for breakout pullbacks to the EMA if they correspond, like this breakout pullback high 1 corresponded with a pullback to the EMA. If we did another pullback here, so instead of having this bear breakout selling off, if we had, let's say, this bear breakout tail at the bottom, and then a micro double bottom in another, like, see this structure that we had here? If we had that here, I would be more comfortable to take it. So I need to see just a few confirmation facts before I jump into the market. All right, guys. All good. And yes, thanks for the correspondence. We will catch up, and we will see you all next week. Take care then. Cheers. Bye-bye.